Joining us with his outlook this hour, KBW CEO Tom Michaud is with us. It's good to have you. You said it's an important day, and you've got some ideas on what it would take to restore confidence.
Absolutely. If we've learned anything, and I know Chairman Powell talked about it yesterday, hoping that the First Republic resolution was going to bring some confidence and find some stability. I think what we've learned now is that this turmoil is still rolling, and I think it won't stop until we build some stability into the system. And and also what I think is remarkable is the regional banks actually have done very well. Last night, not their stock prices, but Western Alliance last night put out a inter-period release saying that deposits were up, they're executing on their plan to sell assets, they're building capital, everything that the market and investors should want, but that hasn't taken the heat off of the stock or off of the bond prices, by the way. The bond prices have been seeing turmoil as well. So investors are very nervous. And I think what they're nervous about is the fact that Silicon Valley lost 75% of their deposits in 36 hours. There's not a bank in the world that could really sustain that. And so I think that the market's trying to figure out what happened. Now, Silicon Valley had some idiosyncratic features which made it the bank where if that was going to happen, it was probably could happen there. But the market is nervous about the system. And to talk about the system and something that Yelena just talked about, which is when Congress took the power away from the FDIC in 2010 to real-time monitor deposit insurance, it didn't realize the speed at which money can move, and it didn't realize how big the G-SIFIs were really going to be. So now there's this undertone of too big to fail, sucking deposits inside the banking system towards the big banks, which will ultimately maybe make us riskier, not safer. Sure. That's number one. And then number two, this whole view about how fast money can leave a bank. So what we need, in my opinion, is in the next bill that Congress passes, they should put in a clause for a year, give the power back to the FDIC, let the FDIC create an orderly moment, and then let's have a debate on how we're going to modernize deposit insurance so all these regional banks don't have to have these runs that periodically come at them, whether it's their stock prices or otherwise.
That sounds great, but we can't even get a deal on a debt ceiling right now. And if we're talking about hours or days when it comes to these potential bank runs and this crisis of confidence within the regional banking sector, what can be done to staunch the bleeding, at least from a stock and bond perspective, right now in the meantime? What'll
happen is and the management teams that I talk to, is they're going to be all in on solidifying their balance sheets, serving their best customers, and it's going to be absolutely a factor that continues to bring the economy to a halt. And while that's happening, you're going to see more market share go to these biggest banks, and the banks that actually lend to middle America and Main Street America are going to have less capacity to do that. And in several years' time, we're going to be really unhappy about what happened, and it will affect the economy.